The path to $50,000 Bitcoin in 2023. In this video, something a little bit different, a little bit longer. We're going to go into a bunch of arguments for why the Bitcoin price should go to $50,000 this year, what that path might look like, macro. We're going to look at a counter argument of an invalidation and so on. And we're going to look at past price history and a strategy for how to trade it. So welcome in fam, much love. Trav here. Now, first, we have major trend line breaks, and when there's a major trend line break, there's a trend shift. What happened here looks very similar to what we're seeing here. And here, this is a golden pocket retracement. It doesn't have to happen, but from top to bottom, we retraced 60% of the move. We went from 3,000 to 14,000 really in a couple months. It's an insane rally. And I'm expecting something like this to continue, and I'm going to give you a lot of arguments why. So now we had our major trend line breaks, of which we broke many. We broke many major trend lines. We've had a trend shift, and there's a lot of reasons for price to go higher. So the first one and the most important one is US inflation. We peaked in June 2022. 1, 2, 3, 4, 5, 6. We've had 6 straight lower prints. We're in a downtrend. Before that in 2021, how many higher prints did we have? 1, 2, 3, 4, 5, stayed the same. 6, 7, 8, 9, 10, 11, 12, 13. 14 higher prints, and then we've had 6 straight lower prints. Inflation is coming down. Fed funds rate, we can look at this one. United States, predicted Fed funds rate is another important thing to look at. Let's look. Market probability tracker. It's saying that we've likely they think we're gonna go up like 125-point hike and then terminal and we go down. And I think that makes sense because we have, yeah, it's happened. We peaked inflation. Now, also important, if we go into the last year, let's see where the most liquidity is in liquidations. It's above this high at 48,400. There's an intermediate high here at 26,000, which we seem to be coming for. There's this high, there's this. I think it's quite likely we drive towards that. I don't know if we get there exactly. There are some counter arguments, and I do want to look at those. But we are just continuing to drive into liquidity. Now, let me add to this some macro arguments. Here's my thesis. Okay, Ukraine wars, it happened. It's closer to resolution than start. COVID is done. China is getting through its issues. Evergrande is, that happened. It's over. The supply chain bottlenecks got fixed. That's not a problem anymore. All the crypto leverage got wiped out. Miners capitulated. I'll add this. Hated disbelief rally. Some people are in euphoria, but everybody who missed it is mad. Okay, noob shorting. A lot of people who started trading in the last year. Oh, I gotta plug in my battery. Let's be right back. Paused it. Let me pause that. Okay, got my battery. There's a lot of sideline liquidity. People will come in and buy higher prices. They will also come in and they will buy lower prices. I just think there's a lot of buying. Now, I want to look at two more macro charts before we come back to narratives and counter narratives. One is the equities just broke their downtrend line, which has been respected since was established in March. It's almost a year old. We rejected from it 1, 2, 3, 4 times, and we've closed above it. Same with Nasdaq. Dollar topped in September actually and broke its uptrend line in November and has been in a downtrend ever since. So there's a lot of things to look at. I think I might have triggered an ETH long. Let's take a look. We're going to talk about how to actually trade it too. That's important, and look at past price action. Narratives. Just trying to figure out what might like the new memes might be. I think as price sort of doesn't dump, we're going to see a lot of celebrities come out and say they bought the dip, whether that's athletes, musicians, whoever it is. People showing that, hey, I bought Bitcoin at 16, I bought it at 18, I bought it at 20, I bought whatever it is. We may see, if not an ETF, but institutional offering. We might see up-only memes. One thing is Trump running for office, and he loves an up market and just dovish policies. That's something that could happen. So counter narratives. If exchanges, there's talk of banning exchanges. I don't think that will happen. Excessive regulation, which I actually think is a plus. People talk about recession. It's not happening so far. Well, it sort of happened, but the labor market's good. More FUD over BTC mining energy cost, but that could also just be fuel for Ethereum and other cryptos. So my main invalidation for this idea is that if we get higher CPI, then that just it starts to trend up. 1 month maybe isn't too bad, but if we start to go higher, like it's new thesis wrong. So we might even go to new lows if inflation starts to go to a higher peak, or at least chop. If there's some kind of credit crisis that happens. So we're going to come back to the trade setups that I'm going to do. I want to look at past price history, and I also want to show you guys this. If we go to bar replay, bars pattern, take the bottom to say over here. Okay. This is a similar, really similar bottom pattern. So say we get this rally and it plays out similar and we just go up, which I think is possible and is actually my primary thesis right now. A couple things. The first thing is if you miss this rally from the bottom like me, fucking sucks. I get it. But you got to move on. We need to move on from that and play the ball as it lies. If you're a professional golfer and you get off course, you just have to hit the ball where it lies. So we're going to make a plan for where we currently are, current risk, current trade setups, and not say, since I missed it, I'm going to wait for a better opportunity to buy the dip, or I'm going to short it, revenge short it. No, let's make a plan. It's happening now, and we'll have invalidation and we'll use risk management, but we're going to try to participate in this move if possible. I am going to look at a case for a price to come down back down to 20,000, 22,000. We're going to look at that. We do need to look at local price action. I think I got triggered in. Did I get triggered an additional ETH breakout? I don't think so. Not quite. 1665. Maybe. Another note is that if we look at the Fed funds rate, they're not predicting it goes back to zero. Maybe it does, maybe it doesn't. But the point of that is if we look at the 70s, there's an argument that even if we have an insane rally and there's price history for us, that we'll actually come back and retest these lows later on. That we will, yeah, come back and take a lot of the liquidity here. So that means if you're bought spot here, you might be underwater at some point. Even if we go straight up from here, if you leverage long, I don't think it's safe to leverage long to all-time highs. I think it's going to make sense to take profit. And in my opinion, the way that I want to play it is, and I haven't really played it very well, but after every leg up, take profit, close out majority or all the positions, and then look to reposition with larger positions using the profits from the previous leg up to finance. This also helps if, like, say, there's a top here, and I thought I was going to be up here. I took all my profits in this area, and I just took losses trying to long it, and then my invalidation changes, and I'm out. So that's a way to smooth some variance on it. So before we talk about the specific setups that I'm going to be trading, I want to look at the case for just pulling back to 22,000. And mostly it's from a liquidity perspective that we've built a lot of liquidity here, and there would probably be a lot of forced selling under 22,200. And for people, larger institutions who have missed this move and want to participate in the move higher, that would be a good place to buy, and they may wait to buy until if price comes down here. So that's an argument. However, for me, I'm not going to wait for 22. I'm going to participate in a number of ways. If we come back down here, I will trade that. So, you guys been watching the last week. I in my paper trading, yeah, I had a horrible January. Whatever. I have to play the ball where it lies now. But I paper traded breakout trades on both sides. It didn't really go very well. Breakout and breakdown, especially the breakdown. Like I'm only going to trade one way. I'm going to trade long only until I'm invalidated. And I'm going to trade. I have 3 setups that I'm trading. High time frame breakouts, sweep into gaps, and inside ladders. So before we get into the specific trade setups, I want to look at a couple previous bottoms. And what I want to point out here is that a lot of the time on these bottoms, you do get local pullbacks, but there weren't the major pullbacks that, because we're forming an uptrend. This trend line never broke, and the liquidity beneath it was never taken. This trend line never broke, and the liquidity beneath it was never taken. There was a nice sharp pullback here. After that, this trend line was never broken, the liquidity was never taken, at least until we topped. What was the sign that we topped? Well, maybe if the fib was a target, maybe if we just probably this, like we just consolidate for too long, and at this point, it makes sense to be closed out of every trade up here, and then to start trading both ways. This is not that bullish a structure, really. Such a long consolidation. But the point is, we didn't get these major pullbacks, but we did get minor pullbacks. So I'm going to go over briefly the 3 trade setups that I'm going to be trading. The first one is a breakout long. Where, I don't know if this one works exactly, but like key levels are broken. We just go long and add on to positions. Okay, I didn't even know it was going to work exactly like that, but this is an example of, this is a past breakout that's already happened. So I think where we are now is more similar to, okay, this is the first base camp. So this is our first breakout. Okay, now, no, we never cleared this liquidity. So the other setup of which we'll see which one works. There's two of them. So I have my sweep into gap set up for long, which says we're gonna go long and a sweep into this gap. I don't know if this is gonna work, if this one will be a winner. I'm not too sure if we will wipe lower, but something like this. And since we have much higher targets, I'm more comfortable using wider stops to try to get these trades to stay. All right, this one didn't work. That said, as soon as we see expansion in the other direction, we can long inside of these lows, something like this, and aim for higher. So I'm waiting for these. I'm trying to guess where a bottom might be. If I miss, I'm going to go and trade on the inside. We're going to try to trade breakouts, saying like, we clear this, we should be inside here. I don't know if this one works either. Maybe it does, maybe it doesn't. Could break out up here. It looks like we had a big dump just now. Let's take a look. Or not a big dump, but at least a failure to hold above, which might be a sign to take some risk off, maybe. Okay, now let's look at the current setups I have. We broke out of this trend line. Now again, I want to say like how badly I fucked this up, but we just need to move on. That there was an inside long here where I would long 50 Bitcoin and I did not hold it. And I wouldn't say I'm really set back by that, but that would have put me ahead years. That would have put me ahead years holding this. And I had a thesis for higher prices, but I was just, I don't know. I got distracted and I made mistakes and I wasn't paying that close attention. And also I hadn't really studied breakouts. And I think the breakouts is the $1 million lesson where, yeah, later on I will be able to trade breakouts. Okay. So there was an inside long, there's a sweep into gap here, which I took. There was an inside long here, which I took. There was several inside retracement longs, which were viable. There was a breakout here. There was a breakout here. There were several breakouts in here on higher time frames from those coming down. There was an inside long here, which did great, which I took, but I closed early because, I don't know, psychologically I was just not in the right place. I'm ready to risk now, though. So I don't expect price to come down here, and I also don't expect price to come down here, although it might. This one is more likely. It's more likely to me that price comes down into the middle of the range, and that's something that I'm prepared for, and I'm prepared to trade. Now, my position sizing is very measly 0.5% per position, but I'm trying to add on as often as I can, as many pullbacks and breakouts as I can. I have a pretty small position right now. I didn't have this breakout long triggered, which is good, I guess. My positions are, to me, okay, I'm long 2 Bitcoin and Bitcoin and a half worth of ETH. My position is 1/10 of what it was at the bottom. It's small as fuck. My risk is small, but I would have doubled my position if we had pulled back a little bit, doubled to tripled it before this breakout, which is what I was really hoping for, to pull back into here first. Build a larger position, and then as we break out, I can add to it, make it bigger. Either making it bigger by closing, taking profits, and opening new positions with bigger risk, or just by adding on. So let's look at where we are now and evaluate. So I have my stink bid down here just in case we come all the way down here, which is definitely a possibility. I hit my breakout long, which I don't really see a reason to do anything with this now. It's working so far. I don't really like that we took this and are under it. We could easily dump and clear. That's fine though, I'm going to risk it. And I wouldn't mind because that will give me an opportunity to reposition and build bigger. So I'm just going to, anytime there's a 1 hour gap, I'm going to long in it on the way up, pretty much. That's part of my strategy. These are sweeping the gaps or retracing the gaps, whatever you want to call it. There's an area in here that would be interesting to long, but I'm also like, if we get a retracement, then that's a trigger for me to go long. Inside of there, now let's look at ETH. I'm trading both, and I'm trading both with 0.5% risk. This is a way that it's like slightly larger risk. Like, okay, so technically I have 1% risk right now on. We go a little bit higher, I go to 1.5%. Although maybe I could advance my stops. Same idea with ETH. I'm trading the same way. I'm trading long only. I want to look at my intermediary targets right now. So I have two big targets. The first one is not this high, but actually the liquidity above this high, because we left this behind. This 2300 area is my big target, and my expectation is there would be some narrative for ETH to catch up to Bitcoin. And what that is, I think, is the Bitcoin season, ETH season, alt season narrative. So I would expect, it doesn't have to happen, but maybe we go a little bit lower, but ETH comes back towards the top of whatever range it's in against Bitcoin and sort of outperforms up to there. Now, the second large target with ETH would be the April 22 rally up to 3,600. I think it's a lot less likely we get up there, but it's still something to pay attention to. Now, it's worth noting that ETH's rally was incredibly weak, the bear rally. Bitcoin made it all the way to the 0.61868 retracement. Ethereum didn't come close. Like, it went down 95%, and then rallied all the way up to only being down 74% with a 23.6% retracement. So, is this time different? I don't know, but it's worth paying attention to, and also to not being married to these exact targets and exact fibs, and just saying, I expect higher prices until something else happens. So, let us let me think about let's think about how to trade this. So I have this one. I just want to add on everywhere that I can, and it looks like it's wanting to break out, and it makes sense to me with equities opening and breaking out. I think a lot of people are going to dump in money into equities on Monday. Possibly. It doesn't have to happen. So I have this breakout higher on ETH saying, I think we should go to follow Bitcoin to new highs without a significant retracement. And I'm looking at some more major trend lines, like from here to here to here. From here to here, we look at these trend lines and saying, okay, these are actually pretty high time frame trend lines that probably a lot of traders pay attention to. If we break them, we should go higher. I can add on here. Now that we've created more gaps, I kind of want to chase my entry up a little bit. And again, 1% risk is important because we can pull back and my thesis can be wrong and I can lose. So I'm going to keep this, I'm going to keep this, but I think I might want to change this and maybe just long inside here on a pullback and say, if this is broken and we go down, then that's fine. I'm going to look for an inside ladder retracement here. If I lose $4,000, which is less than 2% on a dump here, it sucks, but I will be okay. I don't consider this adding on to a loser either, because I consider this just a separate setup. So I'm gonna change my ETH, change one of my ETH's entries. Bitcoin, I could also think about entering higher. I just don't expect this one to fill ever. And I think it's, maybe it does, maybe it doesn't. I think it's too random also, like, yeah. I have this higher one on Bitcoin. I have these two. We did take this and we are resting at that level. So we could get a dump. I think I'm going to sit on this one, sit on these for now. But I'm going to chase up my ETH order a little bit. And then if I get stopped out on both and we find support in this range, then I can go for an inside long here. I also want to point out, just looking back on this range, that I was long on the inside here, but my stop was in the wrong place. I got stopped out, although it would have come back to roughly entry. I had a long right here, but I was paper trading. So in paper trading, I took this long on both Bitcoin and ETH, and they would have stuck. I ended up getting closing out of them because on paper trading, it combines all your positions. So when a breakout long was stopped out, it closed this at a profit. But yeah, the inside long is by far the best setup that I have right now after any kind of liquidity event just come in. But I like combining it with breakouts, and I like combining it with just kind of also sort of guessing where a bottom might occur. So on the 1 hour, should we retrace here? Maybe we do. This could be the last failed drive upwards before a sweep lower. I feel like we are. Now, if I was trading like Lucky, this would be a technical short trigger right here, where we say, yo, I don't really want to do it, but hey, check it out. We took this high, we fell back under it. But I'm not going to do it because I have a higher time frame thesis that I don't want to be distracted from. Oops. Oops. So I'm happy with my Bitcoin orders. Now, if price runs and I only have these small breakouts, then maybe there's more opportunities to add on later. Just have to have faith that I trade well and I manage my risk. I'll be okay. I don't have any other breakout trades on Bitcoin I'm interested in because actually I think there's one I need to pay attention to that we still haven't broken, maybe. I'm not sure if we have or we haven't. I know on ETH we have something coming up. Yeah, on Bitcoin we broke everything. I guess there's one here, maybe. But that is quite a long ways away, so I'm And that's a minor intermediate high. But it's something to pay attention to of maybe we get the top of our rally here. And that could be a higher time frame breakout later. Okay. So let me think about how I want to add on this ETH pullback if I do want to add on it. If we get a pullback, I'm going to add on a breakout. Even though it's small, like if we get this big rally on ETH, any of these positions are 10 Rs if I'm able to hold through that. Yeah, it's just, I'm such a noob fucking trader, honestly. I'm not good at this, but I thought I was good. I got punished with hubris, but yeah, I just need more cycles. This was my first bear market. I've now seen my first top. I've now seen my first bottom. I have an idea how to play it. Like, why would I didn't play the top very well the first time. I didn't play the bottom very well the second time either. I think there's a chance I can play. I'm talking about a macro top too. I haven't been in the market very long. So I kind of like just entering actually in this 1 hour fair value gap here. Saying like, this is a good retracement and I'll have a wide stop right here. And we're aiming up here anyways, so let's do that. Okay, so what we're gonna do is I have one of these ETH longs, the higher one, 1577. I'm gonna cancel it. We're gonna use a 3.5% stop. I'm gonna budget 1% risk. And what is my leverage for ETH? It needs to be not very much, so I don't get liquidated. I don't want to look I want my liquidation outside of my stop loss. That's important. I think I have 20 or 25. 20 seems appropriate. Oops. Fuck happened there? Okay. So we will. What is the setup that I'm trading right now? This is just a foolish setup where if this happens, then I'm going to lose a lot. Yeah, well, I'm not going to lose that much. I will end up losing another 2% of my account. Now, I would consider this also a retest of this trend line, so that would make it okay. 1624.75. Now, it's important that I hold these. It's also important that I let them stop out. It's also important that as they go against me, I keep trying, unless there's some like really important invalidation. 1566. Entering up here also allows me to not be adding onto a loser, which I don't like. 1567 can be my stop. And what is my take profit? Was what, 2300, I think? 2230 should be 10x. So okay, I think that's enough for now. Just know that if you see price dump and go against me, I'm not getting wrecked very badly. I'm losing every $1,000 to me is less than 0.5%. So if I lose one, two, three, 5 entries, I'm down 2.5%. So that's the most important thing to me. And if I want to build a large position, I need to do it over time. Should have started down here and kept adding. But again, you have to play the ball where it lies. And where the ball lies right now is, yeah. Now again, the way this is technically a swing failure where it could be just another one of these. But to me, the risk reward of it being one of these is a lot higher. And I just want to, I would prefer to play one way so that I can focus on my high time frame thesis. But yeah, I mean, this looks like possibly a reasonable short here. So I'm not going to take it. Rather, I'm going to add on a retracement. Okay, we'll see what happens. Much love. Good luck. God bless. Peace.